That sounds like a fantastic instrument. And I know one other thing that came to mind, I'm interested to know if you'd thought about it or done much analysis on it, was this type of instrument sounds like it might lend itself well to some sort of sector analysis. I know I've done a little bit of work with the relative strength comparison, the idea of basically you're picking some sort of underlying security, usually whatever your base index is, be it the Dow or the ASX 500, or you compare all of the indexes against that base chart to find out what sectors are performing strongest in the particular market, and then you could almost take that almost as like an underlying principle, find out what sectors are really performing, and then you put your money straight into that sector using something like the exchange traded funds.
Yeah, that's a very good approach from a fundamental standpoint, where it's a rotational approach, just as you said, and you're always shifting your money into the strongest relative strength ETFs. And you can do well that way if you're not an active trader. That doesn't require a great deal of trading. You can review your holdings once a week or once a month, and that's not a bad approach at all. What that will do is usually it will beat the index that you're trying to emulate, or let's say it's the ASX. It will usually beat that, so that if the ASX goes down, let's say 10%, your ETF rotational strategy might not go down at all. It might go up. And if the ASX index goes up 10%, your strategy probably go up, 15, 18, 20%. So yeah, that is a good approach. What I like to do is more aggressive than that in terms of more active trading.
Yeah.
And so what I do is, with the swing trading, is develop specific ETF selection criteria driven by each of the four methods that we teach in ETF Profit Driver that will using the search engines on most good charting software, that will home right in on those ETFs that are currently offering the very best of the best trading opportunities. And it might be commodity related, might be sector related, it might be country, it might be currency, you don't know. It might be a bond. Okay. And what I like so much about that is I don't have to personally study all those different areas fundamentally, to say, well, should I be investing in emerging markets right now? I don't know. But
let the chart decide.
Yeah, let the chart decide, and bam, it's uncanny. It goes right to where the opportunity is right now. Yeah, I like that.
I agree. There's I suppose the two different methods we were talking about there for those who weren't sort of following us. There's when you're comparing your almost like bottom-up or top-down analysis. Sort of the relative strength really is a top-down analysis where you look at the sector and then you break it down to the stocks in that sector, and that can be viable. But like Bill said, it's more sort of your more longer-term trading, and then again based on fundamentals as well if you start to actually look at the fundamentals driving the sectors. But I'm of the same opinion, where I like to do the bottom-up stuff where you define your rules, you scan whatever basket of stocks you're looking at trading, looking for stocks or ETFs or whatever you're trading, exhibiting those characteristics for you that mean, yes, this is something that's trending and I want to be on that trend. I suppose we started to talk about that. Maybe we drill a little bit further down into that. Bill, I know obviously probably with this audio we're not going to have the time to go into the four different methods, but maybe if we could just briefly talk about one of the different methods that you are looking at trading ETFs, and sort of maybe drill down a little bit deeper just to find out, well, what type of trader would it be suited to, what term of trade, that sort of stuff.
Sure. With ETF Profit Driver, we're teaching four methods that work synergistically together in the swing trading endeavor. And one of those I'll talk about is the breakaway method, which jumps on particular kinds of market breakouts where the new trend is just emerging. And of course, the problem with breakouts is there's a lot of false signals, and they can really chop you up if you just use classical technical analysis. And so what we've done, and this is borne out of long years of experience, is put together the setup conditions tailored to the behavior of ETFs, because they do behave. The price action on ETF does behave a bit differently than individual stocks. And so we put together these setup conditions that, when present, will identify high opportunity breakout trades. So we call it the breakaway method. And so what we're doing is we're getting on board the newly emerging trend when most traders and most of the market least expects it. And what's so good about this is it's not for impatient people, that want to trade all the time.
Yeah.
These don't happen a lot. But when you're looking at, 600 or more ETFs, you don't need it to happen a lot. All you need to do is happen here and there and there, and you'll with your search criteria, you'll pinpoint them exactly when they happen and be able to jump on board. And these are great trades because you're getting in early in the trend, high probability setup, very definable stop placement, again, where we don't expect the market to go. And then I manage the trade with my two-step exit strategy. And I know this all beforehand. You never want to be in a trade and then wonder what to do once you're in it. That's
Agreed.
the worst kind of trading. So what we do is we use a two-step exit strategy, and I'll give it to you here real quickly. I break it into two halves. I want to exit one half of my position at a definable profit target, and that is simply 10% profit from where I entered the market. If the market moves in my favor 10%, I'm out with half my position. The other half's protected by a trailing stop, but I don't move the trailing stop up very quickly because I want to give the market room, because for that second half position, I want to get all I can out of that move up. And, the only way to make 10, 20, 30, 40% in a market is if you're in there. You got to be on board. So you got it. That strategy says give it a little room, but as the market moves in your direction, go ahead then and move that trailing stop up, and just keep doing that, until it stops you out.